Now, it'll be all eyes on Finance Minister Enoch Godongwana next Wednesday. He's set to deliver his medium-term budget policy statement. Economists saying SA's economy is likely in a technical recession. Now, the cost of living is skyrocketing and Eskom's energy supply crisis is worsening. Clearly, the Finance Minister faces tough decisions. Now, for more on what should be his priority areas, let's bring in a budget analyst, Daniel McLaren. Thank you so much for joining us this evening, Daniel. First and foremost, you are from Section 27, so what is your expectation from the budget speech come Wednesday?
Thanks, Brian. It's good to be here. Look, I think everyone is looking for some announcements around Eskom. I think that has to be the number one priority. Keeping the lights on is essential for everything else we want to achieve as a country. So I think that's the first thing. We need both a debt management plan, an organizational turnaround plan, but also an investment plan, because we need investment in our energy infrastructure. Linked to that, something which Section 27 has increasingly been looking at this year is the question of climate finance. And I think these conversations that are happening around the money from Western nations that supposedly is coming to South Africa, but currently looking like it's going to be loans with some strings attached, and with the European countries having particular ideas about how that money could be used. So it's critical that the amount of money that we receive to help us move from coal towards a just transition is critical, and we'd like to get some more information from the Finance Minister on that in the budget. But really, as Section 27, we really focus on the public health and the public education system. And so what we've seen in those two areas in recent years, particularly since COVID, but also before COVID, is really an emphasis in the budget on reducing public debt and making a signal to investors that the government is committed to fiscal responsibility. But it hasn't really been very honest about some of the trade-offs it's been making, particularly in social spending on things like education and health. And we've actually seen cutbacks in both of those areas. So I think our absolute priority in those areas would be for the Finance Minister to make a commitment to funding those at least at the levels that they were being funded before COVID, because we've seen cuts every single year to education for almost a decade. For health, there's a little uptick because of the COVID spending, but the core costs of health in terms of employment of doctors, nurses, healthcare professionals, spending on health infrastructure has been declining also over the last decade. So I think, this is a mini budget. It's not a main budget, but there is scope and room in the budget policy statement to signal that the government is committed to funding these critical areas of expenditure at least pre-COVID levels.
Now, I'm happy that you mentioned, that, Eskom and some of our other state-owned enterprises also need, some financial backing here. And it seems like we are faced now with economic growth versus social spending, in a way, if I can, make it out to be that when it comes to this budget speech. Now, let's take a look at what could possibly happen when it comes to the budget speech now that he's going to make. Are we going to see some cuts? Because we need funding for our state-owned enterprises, and we also need to see this economic growth. So can we see more cuts, and are those cuts justified?
I think, look, there's always trade-offs that have to be made, and clearly COVID was a huge shock to the economy. We've seen the rising unemployment. We've seen the reduction in state capacity during this period. And obviously the health sector had to reprioritize itself towards dealing with the pandemic. So we have seen reduced tax revenue and a need for increased spending, and that obviously results in more debt. So the government does need to talk about debt, and it does need to make sure that it has a sustainable plan for dealing with public debt. But what we've also had in the last few years is a commodities boom, which most economists expect to continue. And because of the reforms that have been happening at SARS, where we've gone from kind of this really captured institution to an institution which is gradually reforming itself, we've had really quite buoyant tax revenues over the last few years, with the exception of obviously the huge hit during COVID. So we would say that the kind of approach so far of really laying in quite deeply into cuts in social expenditure. I mean, just to give some examples, social grants were cut in real terms. So everyone that receives a social grant, whether it's the 350 grant, the old age pension, or the child support grant, or any other grant, they had their incomes reduced in the 2022 budget. Those grants were cut in real terms. And in education, the same thing. The budgets have been cut. There's less teachers employed, posts aren't being filled, and the government has admitted that classroom sizes are increasing in public schools. And also in health, we've had some community, to government's credit, they have increased employment through employment of community health workers into the system in recent years, but the core employment in hospitals and clinics of nurses and doctors has stagnated or in many cases, in many provinces, reduced in recent years. So we would argue that the balancing act that's been done has been too heavily weighted towards expenditure cuts. We would argue that there isn't really any room to cut those budgets anymore. Like you said, you do need a functioning healthcare system for an economy to function. COVID proved that beyond doubt. And you also need a working education system in order to produce graduates and employees who are going to deliver skills in the economy, and that's also essential for growth. So we think with the solid revenue base that we've currently got, we can. The minister is empowered to take a new course on spending in these areas to make sure grants at least increase in line with inflation, and the same for funding in education and health.
Let's talk more about the public debt that you mentioned earlier now as well, because it is important for government to reduce public debt. But what options are we looking at here in order to do this?
Yeah, so really, I mean, economic growth is kind of one of the most important indicators when it comes to managing public debt. So if we can have more economic growth, then naturally the debt to GDP ratio will go down because the GDP will be bigger, and therefore the proportion of our economy that's spent on servicing debt will go down. At the moment, we've got a plan we have paid down quite a lot of debt in recent years. So our debt to GDP ratio and our budget deficit has stabilized, and that should be a strong enough signal to financial markets and investors that the government is committed, even during these really tough times, to making sure it pays down debt. And I think the revenue that we've got now allows us to take a softer approach to paying down debt, because the issue is if you go too aggressively with paying down debt, such as was done in Greece during their recession after 2008, then you actually hamper economic growth, because you reduce government spending by so much that you reduce state capacity, you reduce people's incomes, you reduce employment in the public sector, and these things all have a negative impact on growth as well. So, I think that we need to have kind of a longer view. We've given the signal, the previous finance minister, the current finance minister have been very clear about government's commitment to paying down debt. I think we would like to see a moment where we've turned a corner, and the conversation isn't only about how we pay down debt, but also how we invest in the future, in the areas such as education, health, but also the other areas, our transport infrastructure. Improving that is critical for growth. Improving our housing stock is critical for growth. We need to see commitments made in those areas as well as just this headline commitment to paying down debt.
All right. Thank you so much. That's all we have time for. Budget analyst Daniel McLaren.